Today in crypto, what are some of the most important tokens being built on Ethereum in 2020 that could be ready to explode? Well, this video is going to outline the 5 Ethereum-based tokens that you need to know about and why you should be paying attention to these hot cryptos. The Crypto Lark, this is where you subscribe for all of the hottest and all of the latest happening out there in the wild, wild land of crypto. Also, if you are new to cryptocurrencies and you still need help figuring out all of the basics like how to buy, how to send, how to mine, how to store Bitcoin and Ethereum, as well as the top tips for success and all of the resources that you need to get started investing with confidence, then check out my beginner's course, Cryptocurrency Explained. There is a link down below where you can learn more. So, before we begin the list of the top 5 tokens on Ethereum, a quick disclaimer: investing in altcoins can be a risky business, and good risk management strategies should always be applied to your investments. You are the only person responsible for your investing decisions. This video also only covers these tokens in very, very brief detail, and it should not serve as a replacement for doing your own diligence. Also, no portion of this video is sponsored, just free information for you to use and enjoy. Also, I own some, but not all of the cryptos I will be discussing here today. So this video is not intended to pump my bags, but just to provide you with valuable information that you might find useful in your investing journey. So with that being said, let's get this, guys. Number 1, Chainlink. If data is the new oil, and if crypto is the new internet economy, then Chainlink is the oil pipeline of that future economy. Chainlink provides trusted, tamper-proof data to power smart contracts on any blockchain. Chainlink's oracles allow for real-world off-chain data to power a range of smart contracts on-chain. Because without accurate data, smart contracts, they're not actually very smart. The use cases for trusted data feeds for on-chain contract execution can be applied to a lot of major industries like the securities markets, global trade, supply chains, insurance, and of course, the trading markets. Chainlink has created an industry-leading web of partners across many different blockchains, and it is a major player in the Ethereum Enterprise Alliance, particularly when we talk about the Ethereum Enterprise Alliance Eminent Task Force, and it is also working with accounting giant Ernst & Young on the Baseline Protocol. Both of these initiatives are aimed at bringing more enterprises into crypto and to build on open public networks. In addition, Chainlink is now working with many of the major decentralized finance applications built on Ethereum. DeFi, of course, is considered by many analysts to be the next defining trend in the crypto economy. And of course, Chainlink is right smack in the middle of that trend with its data feeds. And the other trend that Chainlink is perfectly positioned to take advantage of is inter-chain operability, with Chainlink now providing its trusted oracles to chains such as Harmony and Hashgraph and WanChain, among others. Currently, Chainlink has a market cap of over $1 billion, which means that it does have a lot less room for gains compared to some of the other coins that I'll be discussing here today. But regardless, Chainlink has without a doubt established itself as a key piece of infrastructure for not just the Ethereum economy, but for the entire crypto economy. Number 2 on our list today is Khyber Network. Khyber allows for wildly easy decentralized swaps of Ethereum-based assets. No waiting, no KYC, just connect, swap, and go. Khyber achieves this with liquidity pools across many different assets that allow for swaps to happen with minimum slippage. It also allows for merchants to be able to get paid, for example, in USDC, but for you to be able to pay using a token like Chainlink. So Khyber will swap your link over and then the merchant will get USDC on the other end. And Khyber's swapping and liquidity solutions have proven to be so popular that it has now built a very large list, and a growing list, by the way, of very impressive partners from across the crypto space. And Khyber has just passed a huge milestone of having processed over $1 billion worth of transactions, all on chain. We have also seen a massive increase in transaction volumes on Khyber Network over the last few months. The Khyber token, it is a deflationary token which is burned over time based proportionally on transaction fees on the network. And what has got a lot of people incredibly excited about Khyber recently is the upcoming network upgrade called Catalyst, which will bring in staking rewards for token holders. Meaning that Khyber will be a deflationary token which pays out dividends on a regular basis to token holders. Now, the exact rates of the dividend payment have not been determined yet, as they will of course be determined by stakeholders when we see that upgrade go live later this year. Now, there are a few other decentralized protocols out there for exchanging and liquidity solutions and cryptocurrency. So we have things like Bancor or 0x, which are also interesting. And then of course there's Uniswap, which allows for anyone to provide liquidity into the market. But in my opinion, with the upcoming Catalyst upgrade for Khyber, it is the one which I am definitely most bullish on, and the one that I think is going to be capturing a lot of people's interest as 2020 progresses. And considering that the market cap of Khyber is only around $100 million currently, it leaves a lot of room for growth in the future, especially considering that the token will be steadily burned over time. And if staking rewards are strong enough incentives for people to go out and get these tokens, then demand to hold the tokens will go up as well. So we'll be seeing supply dropping and demand rising. Number 3 on our list today is Engine. Now, this is a gaming token aimed at bringing unique digital assets to the blockchain. Engine offers true ownership of in-game items, since each asset is issued on-chain, and its authenticity and its rarity can be easily verified. Now, to create an item, developers must actually melt Engine tokens into it. So for example, if I wanted to create a sword, I could melt 100 Engine tokens into that particular item. Then you win it in a game that I've created, and then you have that. That's uniquely yours. And if you want to sell that at any time for cash or for crypto, well, you can do that. Or you can decide to melt the sword and unlock the Engine tokens stored therein. Now, what is even more interesting for gamers is that the Engine multiverse is rapidly growing thanks to the close cooperation of Engine with Unity, one of the largest game development platforms in the world. This means that your sword can actually travel from one game to the next, to the next, to the next throughout your gaming life, bringing a whole new ability for your assets to live on and on and on. And games like Age of Rust that are using Engine-based assets, they look absolutely fantastic, meaning that gamers will actually want to play these games, and thus the assets in those games will actually be desired by people. And recent moves by major browsers like Opera and major phone companies like HTC and Samsung, as well as major social media platform Reddit, which are all rolling out support for Ethereum wallets, make catering to the future generation of gamers even easier. The current market cap of Engine is around $150 million, meaning that there does actually remain a lot of room for growth for Engine moving into the next market cycle. And the more that we see developers actually implementing Engine-based items into their games, the rarer the token will become, since we will see a greater demand to lock up tokens, especially as these tokens in these games become more popular. And then, of course, you might have gamers holding on to these items for years and years at a time, creating a situation of rarity, of course, good for a limited supply token on the market. Number 4 is Unibright. Unibright is perhaps one of the most important Ethereum tokens in terms of helping to bring more enterprise customers into the blockchain world. It offers businesses all of the tools that they need to fully integrate a blockchain-based business lifecycle into their organization. Essentially, it's working to make it just super easy to onboard businesses to Ethereum, making processes like invoicing and asset lifecycle, supply chain management, all that stuff possible on chain in just the click of a few buttons, with Unibright providing all of the easy to use templates to get set up, meaning that no smart contract knowledge or blockchain coding knowledge is actually going to be needed to be able to leverage the power of open public networks. This will allow for custom blockchain workflows to be built in minutes by organizations. The UBT token is used to gain access to the platform. The initial period covers 30 days. Now these tokens, they must be bought out on the open market. And then at the end of that 30-day period, the customers actually have the option to be able to rebuy the tokens directly from Unibright, but at a lower price compared to the open market price. Also, some spent UBT tokens will be given off to nonprofits like universities and charities instead of being sold back on the open market. Tokens collected by the team will not be resold onto the market, meaning that any tokens that are deposited into the system are in essence removed from the circulating supply on the open market. Now, the net effect of this is that the more customers that onboard to Unibright, the more enterprises we see adopting blockchain technology. It means the more tokens that become locked by these companies that, of course, then continue to renew their memberships, keeping it all with Unibright, which is good for the market health of the token since it diminishes the circulating supply in the open market over time. Now, Unibright, along with Chainlink, is also part of the Ethereum Enterprise Alliance's Eminent Task Force and the Ernst & Young Baseline Protocol. Both of these initiatives, again, are aimed at bringing more and more enterprises into the world of public open networks. Unibright's current market cap is only around $50 million, meaning, again, that there is significant potential for Unibright to grow moving forward, especially considering, of course, the close relationships that we do see with Unibright and the Ethereum Enterprise Alliance, as well as with Ernst & Young, and, of course, with the huge projected growth for the enterprise blockchain space overall in the coming decade. It could be massive. And finally, number 5 is Matic. Now, Matic is a layer 2 scaling solution for Ethereum that will bring a massive increase in throughput to Ethereum via its proof of stake based side chains. Layer 2 scaling is useful for applications that need near instant and super cheap transactions, which is key for creating applications that will actually be able to onboard huge amounts of new users into the crypto ecosystem. So with Matic, we're talking about potentially millions of transactions at layer 2 becoming a theoretical possibility. Matic has already lined up a lot of great partners like MakerDAO, USDC, Decentraland. The use cases for Matic range from payments to decentralized exchanging of assets to gaming to micro-lending to virtual reality, and on and on and on. Matic's mainnet has also just gone live and it will be rolled out in 3 phases over the coming months. And with the mainnet comes staking. We have already seen the market effect that staking has brought to networks like Tezos. I would expect a similar effect for Matic moving forward, with people piling in to get those staking rewards. Now, staking rewards will be based on a different percentage of how much Matic is actually staked, so it will reward depending on how many people actually decide to stake their Matic or not. But if we assume that 30% of the supply is staked, then the rewards will be 20% during the first year. Now, with a strong list of partners, a live mainnet, and a potentially very lucrative staking reward system, it would seem that the current market cap of $50 million actually leaves a lot of room for Matic to grow moving into the future. Anyway, those are just my 2 Satoshis. What do you think of my list? Do you agree that these are the 5 most important tokens built on top of Ethereum? Do you think that I missed something that maybe really should have been on this list? Let me know your opinion down below in the comments section. As always, thank you so much for tuning in to watch today's episode. I hope you're having a freaking fantastic weekend, wherever you are, whatever you're doing. Make sure to hit that like button on your way out the door and subscribe to the channel if you're new around here. Long live the blockchain, and peace out till next time.